Hello, hello, hello. This is Adelai Brown, your heart coach, and I want to welcome you to our Road to Approval Lunch and Learn. Every month we do a Road to Approval Lunch and Learn where we have individuals come to us, our career professionals, medical health care heroes, our veterans, and our emerging investors. And we get together and we talk about the process of purchasing a home. And so every second Wednesday of the month, we do this. So I'm so thankful to be here with you today. I am Adelai Brown, your heart coach and heart realtor. I am the founder of Heart Homes Realty LLC. And at Heart Homes Realty, our motto is every heart deserves a home, and there's a home for every heart. I just want you to know that I'm really thankful that you are here. I'm honored that we are able to do this together and really excited about what will come of this. I'm excited about what you will learn. I'm excited about how this will impact you and your life and your family and your legacy. And I'm just thankful that we all get to spend this time together. So we're going to go ahead and let's see here. We're going to go ahead and get started. Now, the way I typically do the lunch and learns, I get it. It is lunchtime. And because it is lunchtime, you're probably on your lunch break. You might be in your car. You may be sitting at your desk. If you work from home, you might be sitting on a porch eating your lunch. So I'm going to go through and talk a little bit about the process of getting approved today. How do you get approved to purchase a home, approved to get a mortgage? We'll be talking about that today. So I will go through the presentation, but I want to encourage you if you have any questions, if you are live in our Heart Homes room, if you're one of our homies in our room, you can put your questions in the chat and I will review them at the end. We'll go over all the questions. If you are live on YouTube, thank you for being here. Please put your questions in the chat and I will answer those once I finish going through the presentation. It is lunchtime and I'm going to do my best to get through lunch as you know, as simple as possible, as easy as possible, so that you're able to get the information, digest it along with your lunch, and get back to what you are doing. So I'm gonna let's see here. Mm, Okay, I'm gonna share my screen. Okay, and here we go. So let me know if you have any problems with hearing me or if you cannot see my screen, but we are here. Our Residence Ownership Initiative presents the Road to Approval, our Road to Approval Lunch and Learn hosted by me, Adelai Brown, your heart coach and heart realtor. Today's topic is getting approved, like I had previously mentioned. So let's get it going. So just a little bit about me. Oh wow. Okay. I am your heart coach and um I am the owner and founder of Heart Homes Realty. I have been in the real estate industry for 15 plus years. I have been a licensed real estate agent now for 6 years. And I do heart work. I mean, I do real estate because real estate is a way for me to do heart work. And grow heart equity. That is my mission. That is my focus. I feel like that is why God put me on the earth, to grow personal, relational, and financial wealth through authentic living. I am a coach, a life and business coach. I am a licensed realtor, and I am a community advocate. And I really take these titles seriously. I don't just say this just to say it. I'm saying it because it is important to me for me to show up in my community the way that I do. And being a heart work practitioner, one of my focuses is emotional intelligence. EQ. That is one of the biggest determining factors in your success, especially in today's world. Everybody's smart, everybody can Google, everybody can use AI. You have to be able to regulate your emotions and do that while being able to show up and get work done and live on purpose. And I help individuals do just that. As a realtor, I help guide professionals from renting to ownership. And even further on, many of the individuals that I help become first time owners, I've also supported in helping become first time investors. And that's really exciting and very rewarding as well. I'm an advocate for wealth building. And like I said earlier, the mission is every heart deserves a home, and every home, and there's a home for every heart. So, what I want you to think about is, let's see here. Let me go back. Last month with our lunch and learn, we talked about um, getting your budget together, savings and budget, and the importance of that, right? One of the reasons why that's so important is because when we talk about getting approved, when you get approved, your budget, your savings, all of that has a big impact on you getting approved to be able to purchase a home. And I'll get more into that definition as well. Now, next month, we're going to talk about the process of shopping for a home after you've been approved. But for now, we've talked about budgeting last month, and now this month, we're going to talk about the actual process of getting approved. Now, remember, this is not designed to overwhelm you. Right? We're zooming out to a big picture, but I want you to get this information so we can take the fear out of home ownership. Okay. Now, where we are in the process, you've secured the right realtor, you've done your budgeting and your goal setting, and now we're looking at your getting approved. And like I said, next month we'll talk about what happens after you get approved. We start shopping. That's usually the fun part of purchasing a home. Now, I want to let you know that once you participate in a lunch and learn or you close with me, I consider you one of my homies, right? One of our heart homes homies. So when you hear me call you a homie, I just want you to be clear on what that means. These are people that are committed to education. You are committed to honesty. You are committed to um, wisdom. You are committed to just understanding that if we're working together, you are protected through the process. When I think about a homie is a friend, a confidant, someone that's close to me, someone that I share um experiences with, especially experiences that are pleasurable. So when we think about the process of buying a house, I look at you as a homie, and we're looking for homes, and this is hard homes. So I just want to make sure that you understand that you being my homie, my commitment to you is educating you with the information that I have, being honest, being upfront, being in integrity throughout the entire process. I'm not here to rush you. I'm not here to try to sell you anything, but I am here to walk you step by step and call you forward into home ownership. I believe that we were all called to possess the land. The Bible tells us to possess the land, and I believe that home ownership is one of the ways that we do that. So I'm making space for learning so that we can be more impactful in home ownership and be able to build our lives, our legacy, our families the way that we desire to do that. And doing that together makes us homies. Okay. So just remember that as we go throughout the process. Now, when we look at your, let's see here. Okay. What getting approved really means. So when you look at approval, it's a process, right? A lot of times getting approved, the process of doing a mortgage application. A mortgage is what you sign and agree to with a bank or a mortgage company or credit union, some type of lender saying that they're going to loan you this money to purchase this home, and you're going to pay this money off over a period of, 10, 15, 30 years. And you have to get approved for that mortgage. So if you've ever done any type of application, credit application, a mortgage application is very similar to that. A lot of people are very intimidated by the mortgage application, but it is really, I can understand why it can feel very scary. It can sometimes feel insurmountable. But really, if you've ever done a car loan, if you've ever done a student loan, if you've even ever done a credit card, a mortgage application is very similar to that. Right? Lenders review patterns and not perfection. When you do a mortgage application, there are typical documents that you need to have. You need to have your driver's license. You need to have your bank statements, right? Typically, a bank wants 3 months worth of bank statements. You need to have your paycheck stubs for proof of income. Typically, when you're doing the application, they want 30 days worth of paycheck stubs to show what your income has been over the last month or the last 30 days. When you do a mortgage application, they want to make sure you file taxes and they want to make sure you have your W-2s as well as your tax returns. So these are just standard documents that a mortgage company or a lender would ask for when you're doing an application. Now, I tell people all the time, yes, that's a lot of information they're asking for. But if you had someone coming to you that you did not know, they just out of the blue one day came to you and said, "Hey, I want to borrow $425,000." If that were you, and most people I know, now I know some people may just give it and they don't have a problem with that, but most people I know, if that happened to you, you were not going to just give that money to that person. You need to find out, how do they pay? How do they, what are the things that they're doing? What kind of job do they have? What has their work history been? Right? You typically also need 6 months 6 to 12 months worth of work history, current, consecutive, right? So you filed taxes the last 2 years, you have your W-2s, you have your tax returns, you have your paycheck stub showing that you've been working for at least 6 months to a year. You have your bank statements and you have your identification, and then you fill out that information. You fill in the information. And that's typically like the hardware that goes into actually getting approved and doing the application, right? But a lot of people are very afraid to do the application because they're thinking their credit has to be perfect. It does not. They're thinking that, they might think they have too much debt, or a lot of people are just afraid to be rejected. A lot of people are afraid to hear no. And I am here to tell you, in the lending and banking industry, I've heard bankers say this, but I've seen it for myself. In the banking industry, in the lending industry, it's never no. It's just not yet. It's never no. It's just not yet, right? This past year, 2025, I did 3 or 4 real estate deals with individuals that have been denied by other lenders when they did the application, but they came to me and I was working with one of my trusted lender partners and they were able to get approved. And it happened because they told me what was going on and I was able to help them. Right. So consistency matters more than credit myths. That's why we talked about, in the very first lunch and learn, secure a great realtor. You know, I encourage you to get with a great realtor. If you don't want to get with Hard Homes, get with Perspective Living, get with Legacy Building. I know some amazing realtors. If you don't want to work with me, I have some amazing realtor partners that I can refer you to. But get with a good lender so that you can work through these myths with someone, I mean, with a good realtor who can get you with a good lender so that you can work through these credit myths, right? And understand that timing and strategy really does change your outcome. I've had many clients come to me, do an application, get an approval, but it's not the approval they want. It doesn't allow them to get the home they desire to get. And sometimes when that happens, we have to look at, okay, um, what's the best loan for you right now? Right? What is your need? How soon do you need to move? We have to be willing to work through the emotions and be able to strategize. I am all for feeling the emotions, confronting the emotions. I am the heart coach. Trust me. I'm like, and I guide my clients through that, right? But what you want to make sure that you're doing is, when you do an application, you go in open minded. Right? You do the application, you see what the lender tells you, and then you take that information and then you do with it what works best for you and your situation and your circumstance. So I've had someone do an application. Let's say they do an application in January and they get approved, but the mortgage payment might be higher than they want to pay, and they may not get the amount of approval that they want. So they have the approval, they're shopping, don't really find anything within that price range, or maybe they get that approval and they wait because the lender lets them know. We look at their credit and we say, okay, you can pay this off. Maybe you can refinance your car and get a lower monthly payment, right? Maybe there's some debt you can pay off so that you can improve your affordability and have a better approval that works best for you, right? Which is the changing the outcome, right? But the only way to do that is if we prepare, right? When we prepare, you have more confidence. That's why you need to get with your realtor and start talking to them. I tell all of my clients, when you contact your realtor, you started the home buying process. A lot of people think it happens, oh, well, I'm not starting the home buying process until I'm approved and we're actually shopping. No, that is like step 4 in the process. It could be a further down, but I just make it step 4 in my process. There are 3 other critical steps before we get there. And all of that is you in the process of buying a home. So homies, don't let homies go around and do, and squander away their approval or make decisions that aren't best for them. And so as your realtor, I hold you accountable. I'm checking in. It warms my heart when I have some of my clients, some of my homies who will reach out and say, I know I want to buy, but I have this going on and I wanted to know, can I do this? Right. I had somebody call me around Christmas time, was like, I know I'm buying next year, and I know you told me to, keep my debt down. So I want to purchase this and I may have to finance this. And I just want to know, is it okay? And I appreciated that because it made me realize you get it. You understand. You heard what I said and you listened and you're following those directions. And that's why this person is on track to purchase when they're ready, they're wanting to purchase. So we're going to keep moving here. All right, let's see. I feel like, okay, I feel like something is missing here. Okay, so wait, give me a second. Give me 1 second. Let me check something out. Let's see here. Oh, okay. Um, I need this to go up. Okay. Okay. There we go. All right. Okay, y'all, give me a second. Getting it together. Okay, this is where we are. Let's see. All right, there we go. All right. All right, y'all. I think I got it. I think I got it now. Okay, here we go. So we talked about approval. We talked about getting the approval done and the documents that you need for the approval. And it's just like doing any other. That's not it. You know what? Yeah, that's fine. We'll do that. We'll do that. We'll stick with that. So we talked about getting the approvals done. And then now we look at the type of lender that we're going to go to. So I talked about doing an application. So that's usually the biggest fear. What I have found, and I told you, is different types of lenders that you can go to, and then these lenders offer different types of loans. And so when we look at the different types of lenders, you have your banks, your mortgage companies, you have your credit unions, and you have your online specialized lenders. Like you see places like Rocket Mortgage and other companies like that. You see them online. I think it's like a Freedom Mortgage, and it was a Loan Depot. I think that's another one. These are all like online mortgage companies. So you will see those types of companies and you see those types of options. When you're looking at getting approved, sometimes you have to try multiple types of lenders in order to find the mortgage that works best for you. The best way I can describe a mortgage to someone, it's like when you're shopping around for car insurance. And you can call different companies. They're all offering car insurance. They're all pretty much offering the same product, but they're not all going to give you the same quote. They're not going to all have the same rate, and they're not going to all be able to offer you the same perks. So you want to shop around for the insurance that's best for you. Sometimes it's best to shop around for um the mortgage, the type of lender that's best for you, right? So the lenders, when we think about a lender, so a bank, it's like a traditional lending institution. Typically, when you're dealing with a bank, they're going to move a little slower than other lenders, but they are often have the flexibility to offer larger loans or and they may have different programs and offers that they're offering. I don't like to say discounts, but they have certain specials or special mortgages that they may offer, and they can do more of that. But they typically cannot move fast for you. A mortgage company is usually very flexible and specialized. Mortgage companies usually work well when you're dealing with people that are self-employed, people that have non-traditional types of income because they are more flexible. I typically take my clients who have more challenging credit scores to a mortgage company to see what their approval is because a lot of times they may be able to gain more uh, approval or get more of the terms they want from a mortgage company because of their credit or their income circumstance. A credit union is member owned and usually relationship based and driven. And they a lot of times offer really good mortgages, but they don't move fast. So if you're on a short timeline, a lot of times the credit union and the banks don't move as fast as the other lenders. They can now, don't get me wrong. I don't want my lenders to get on me, but banks usually take a little longer with the underwriting process. And an online lender, They may be offering a specialized lender is just that. They may be offering specialized products. They may be able to process your mortgage fast. They may be able to give you a lower rate. But what I found is a lot of times those little processing fees can be a little higher. And then also you can have um the loan processing fees can be higher, and it's harder to get support when you're having challenges through the mortgage process and even after purchasing, because everything is online and a lot of times it's not in your town, in your city, and sometimes you need that through the mortgage process. So that's something to think about when you think about the type of lender. So you can already look at, where are you banking, right? Where do you deposit your checks? Where does your direct deposit go? That might be that might be a good place to start. But when we look at your credit and we look at your income and we look at your individual circumstance, we may say you might want to start with a mortgage company, or you might want to look at a credit union or look online. But I typically steer away from online because I do like being able to talk to people that I know and people that are real and that I can reach out and touch at any given time. So that's something that, I usually advise my clients to do. But in all actuality, many of my clients, through the process of getting approved, will do an application with a bank, a mortgage company, and sometimes a credit union in order for them to be able to decide which mortgage is best for them. And it's so interesting. I actually had a closing this past December that individual did that. They did a application with a mortgage company, with a bank, and a credit union, and we ended up going with the bank. They had the better terms for her mortgage. All right, so the types of loans. So when we look at a VA loan, it typically a VA loan is for veterans. So you have had to be honorably discharged out of the military. You get your DD 14, I think, or DD 214. I might not be saying that right, but you know what I'm talking about. You get that. That's you have your that shows your discharge and all of the information a lender would need to have in order to approve you as a veteran. Now, zero down payment does not mean zero money to closing. Most loans, when you purchase a home, the loan origination costs along with the down payment um, can account for about the loan origination itself could account for about 3%. The down payment can vary. So with a VA loan, you don't have a down payment, but you still have closing costs. You have lender fees, attorney fees, title processing fees that still have to get paid. So that's a lot of times some veterans think they don't have to pay money. You do have to pay money, but you don't have to pay a down payment, right? There's no monthly PMI, and it's only for veterans. So a FHA loan is is backed by the federal government. It's a standard 3.5% down payment. Typically, a FHA loan is more flexible with credit. You may have a lower credit score, or you just may have a high debt to income ratio, and we'll talk about that in the next slide. But a FHA might be better for you, and mortgage insurance is required. Mortgage insurance is for the mortgage company, and if you get a FHA loan, you will always pay PMI, primary mortgage insurance. And that's usually about 1% of whatever that loan may be. USDA. USDA is zero down payment in eligible areas, and usually it's in areas that are deemed rural areas. There's a website you can go on. You can check and see if the location is considered USDA is, and if it is, you can apply for a USDA loan. So it's really good in rural areas. A lot of people in rural areas usually access the USDA, but the debt to income limits are something that can steer some people away, and some people just don't know about it. They don't know USDA is there. And another thing with USDA is it does have income limits for those that are using USDA, depending on the type of mortgage you get. When you think about a conventional loan, and all of these are different types of mortgages that you can get. So a conventional loan is typically 3 to 20% down, but there are some special cases where you can get up to 100% financing, meaning zero down payment. Mortgage insurance doesn't always have to be on a conventional loan. It can, or it may or may not be, but that's where it's determined on what lender you're using, what type of lender. Is it a bank? Is it a credit union? Is it a mortgage company? And that'll really determine what type of conventional loan you get from them. Um, and it usually offers a lot of long-term flexibility with what you want to be able to do with the home. And then you have special conventional options or just special loan options in general. You do have some 100% financing options and programs and lenders out there that offer, but many times people talk about getting down payment assistance, which I always advocate for it and I try to help my clients get it. But one thing I've learned over the years is down payment assistance loans usually take buyers. They're usually way more conservative, and so they're more strict on the buyer. And a lot of people who want the down payment assistance, sometimes that's not the best loan for them because the terms aren't good. The interest rate, um, the PMI, primary mortgage insurance. So there are loans out there, banks, some companies give people down payment assistance when they're purchasing their homes. So there are different financing options out there, but you just have to, and down payment assistance options out there, but you just have to really do your research with those and make sure you understand what the process is. Because a lot of times, down payment assistance, people think is free money and it's not. You pay that back, but you pay that back on the back end of having the home. And, as we grow and learn, we can talk more about that. And if you have questions, don't forget to put it in the chat or in the comments on YouTube. Okay, so we talked about the different types of lenders. We talked about the different types of loan. So how does income and debt impact your approval? So what are lenders really looking at? They're looking at your income stability. They're looking at your monthly debt obligations, right? And that determines your debt to income ratio, and they're just looking for consistent financial patterns. So a lender is looking to make sure if you make uh, $60,000 a year, then you should be bringing in about $5,000 a month, right? They're gonna be looking at that. Um, they're gonna be looking at that, and they're gonna look at your bank statements. They're going to look at your taxes, and they want to make sure that your taxes reflect you make $60,000 a year. They're going to look at your bank statements and make sure the consistent direct deposits from your job or however you're getting paid are being deposited in that bank account, right? I've had some people that don't want to use bank accounts. If you're going to finance a home, you need to use a bank account. You need to start putting money in the bank, moving money through the bank so you can have a paper trail so the bank can see that you have money, you have income to offset your debt, right? So let's look at this, right? I wanted to actually do a to show you, like give you an example of what, like how to calculate your debt to income ratio. So if you have a pen or a piece of paper, you can go ahead and work on this yourself. So when we look at your debt to income ratio, the first thing you want to look at, what's your monthly gross income? So what I just said, let's say you make $60,000 a year. Let's see if I can. Let's say you make we're gonna do this monthly. So monthly you make five. Let's see. Let's see if it'll let me. Y'all, I'm trying something new. 50. Oh no, that's not gonna work. I don't have my pen. I could. That's all right. So let's say you have. I'm gonna let y'all do it. Let's say you have. I needed to undo that. I don't want to. I'm laughing at myself, y'all. I don't like that pen. Let's say you make $5,000 a month, right? And then you have your car payment. Let's say, I'll write it down right here. Let's say you make $5,000 a month and that's your income. So 5,000 on that side. On the other side, you have your car payment, that's 350. Your credit card bills. So when you think about your credit card bills, maybe that comes up to about 200 um a month. Your student loans, let's say those are 250 a month. Your personal loan, and when we think about what a lender is looking at, is not I now it's two things I want you to hear. What a lender is looking at is not all of your monthly bills that you know you have to pay. Okay? So what I'm talking about is what is showing up on your credit report. So that your I can tell you that your why this thing won't take this thing off, y'all. Anyways, I'm gonna leave this alone. Oh goodness. I gotta laugh at myself, y'all. So whatever is on your credit report is exactly what you're figuring in with your debt to income ratio with what a lender is looking at. So when you think about like your light bill, your water bill, for many of you, your rent, if you're not reporting your rent on your credit, that wouldn't be included in your monthly debt. The monthly debt that the lender is going to be looking at, most of the lenders you go to, they're going to be looking at what is reporting on your credit report. So this is why you need to make sure you monitor your credit. This is why you need to make sure you know what's showing up on there. Because whatever those monthly responsibilities are on that credit report, that's the debt that the lender is looking at. So your car note is going to show up on there, your credit cards, your student loans, a personal loan. Let's say you had $150, like let's say you had a $450 personal loan. But the thing about it is they don't factor in the whole balance. They factor in what your monthly payment is. Okay. So let's say your monthly payment is $120 for the personal loan. And let's say um so 200 for the credit card and 200 two. Okay, so we're going to add all of that up. So step one, you get your gross income, which is that ugly little five. That represents $5,000 for the month. Step two, let me pull this up. So we're going to add up the 350. I'm going to get better at this working on the screen, y'all. Just today wasn't my day. I'm playing with these new little nails, and that's a whole nother too much information. But anyways, we homies, so y'all get to understand my life. 200, 250, 120, 920. I want to, no, let's say the car payment is 850 plus 500 equals 1420. So car note, eight, okay, and then we gonna make the credit card bills gonna be $500 for the month because this is more realistic. 850 car note, 500 credit card, 250, 120. That's 1720, right? So to fact now, don't pay attention to step three right now. Step three is something for you to consider on here, your estimated housing payment. We don't really factor that in. I don't usually do that with my clients. I let the lender tell you because there are other factors that will go into this to really give you that estimated payment. They look at other things. So what we're looking at is step one and two, and we're going to do the equation in step four. So we're going to divide. If I had 850 for car payment, 500 for credit card, 250 a month for student loan, 120 for a personal loan, all of these things show up on my credit report. Um, that totals $1,720 a month in my debt obligations. So then I'm going to divide that 1720 by 5,000. And that means your debt to income ratio is about 34%. And that's really good because Some lenders really just determine if they're going to approve you or not by your debt to income ratio. So you can make a lot of money, you can pay all your bills on time, but they will factor this in. How much debt do you have? How much income do you have coming in? How much cushion do you have to take on more debt? So this has a 34 percent debt to income ratio if you're spending let me see if I can write. I'm gonna try it again, y'all. If at first you don't succeed, dust yourself off and try again. So if the total debt is 1720, okay. Ooh, I work on this the next time. And we got 5,000 over here. All right, the DTI is 34. It's 34.4%. So I just rounded to 34. Oh, I'm proud of me for trying. Okay, so 5,000 income monthly, total debt 1720, your DTI 35%. Usually that puts you in a good range to get approved for a USDA loan, a FHA loan, and a conventional loan, right? If you're a veteran, veterans it you're a veteran, it makes you eligible, but different terms change, but that particular percentage puts you in a good percentage anywhere. Now, if your total debt every month is way higher than that compared to your, like you can look at what your debt to income ratio is. Lenders usually like for your DTI to be under, I think it's 54%. The sweet spot I think is like 40%. So when you look at your monthly debt obligations and you look at your income, you this is how you can start preparing yourself to purchase a home. You can start looking at, oh, I might need to cut down on my debt. You know, your credit card payment gets lower depending on how much debt you carry over a month on that credit card, what kind of balance you carry over. When you have a car note, when you get to a certain amount of time, I think it's 10 months or less, they no longer factor your car note into your DTI, your debt to income ratio. So if you know you have 2 years left to pay on your car, you might start saying, hey, I'm going to pay on this a little bit more so I can get it paid down faster so that I can have more income to purchase the home that I want. Okay. Does that help? Let me check. Let me make sure. Anybody have any questions? Because we're gonna get to them at the end, but I'm gonna keep moving. I'm gonna keep moving. Oh gosh, y'all. Look what I did. Let me go back. Let me pull this up. Let me undo. I gotta undo it because it's staying on the screen. Okay. Well, I'm learning as we go. Look, we homies, we learn together. Okay. So the DTI example, here's another one. You make 6,000 a month, your monthly debt is 2,400. Including a $1,200 housing cost, your DTI is 60%. A lender does not typically factor in your rent unless it's reporting on your credit report. Okay. But this is pretty much the equation. And if you take that 2,400, let's do the 2,400 divided by 2,400 divided by 6,000 equals 40%. And that is like an ideal DTI. If you're, you don't really, not ideal, that you don't really want it higher than 40% if you can help it. And remember, this is only for learning. Your strategy will improve as your outcome, right? And this question down here, what would make my monthly budget feel peaceful and pressure and not pressured? So when you look at the income, you look at the debt, many of us were not taught budgeting. We weren't taught about DTI. We weren't taught, debt to income ratios and things like that. So we're learning. That's what this lunch is learners for. That's why we homies. We got to look out for each other. But think about it. What would make your monthly budget feel like it's peaceful and you don't have pressure, right? What kind of income would you need to bring in? And where would your debt level need to be for you to feel comfortable? Think about that. All right, this got mixed up. There's no one size fits all when it comes to loans. This goes with the other one. I don't know what happened with that, but it's okay. We're gonna keep moving with it. We talked about the VA, the FHA, USDA, special financing with select lenders with the 100% financing and other perks. And then cash purchases. Believe it or not, many people purchase real estate cash. I know a lot of people who have been working on their savings for the years. They've gotten into investing and their money has compounded and grown, and they buy real estate cash. They don't need a lender. They don't have to get a mortgage. That is an option. And I like to put that out there because we do have some homies that buy their homes cash, and that is an option. And there are things like seller financing and all of that, but we get more into that in the road to approval, and we'll talk about that later. All right, so when we think about approval and being able to purchase, you do have down payment and support options. A lot of times people don't realize they have more support than they think. So you may have a personal savings, a 401k. I can't tell you how many of my clients didn't realize how much money they had in a 401k because they just pay it out of their checks. They never see it. And until they go to buy a house, they didn't realize they had that much money. I've seen that happen. Um, some people have money saved, inheritance, family members have for them when it comes to gifts. I've seen many clients, the family members, friends will loan them money to get through the closing process, to have reserve funds, or maybe as a gift for a down payment, right? These are all things that can be done to help you secure your home. But you want to apply. You want to do the application so that you can know what kind of down payment support and assistance you might need. And then another thing, there are some employers and community programs that help homeowners, help first-time home buyers, help veterans, and ask your employer. Sometimes they have a home buying fund where they give employees money towards their down payment, which would show up like a gift, or there are different resources out there, but you just have to open your mouth and ask and do the research. Put your fingers and your thumbs on the screens and find out. And that's why we're here together. That's why we are heart homies together to support each other along the way. So, what's next? So, we got through getting approved. Next month, we're going to talk about shopping for your home. We're going to talk about what goes into that. We are going to answer your questions that you may have about that. And I really encourage you to come back. Was this information helpful for you? I want to know, right? So make sure you give me your questions, leave your comments. Um, Come back next month so we can talk about the home buying process and invite another homie with you, right? There's somebody that has questions about real estate, has questions about home ownership, and I think that we can do lunch together. All of us can get to know each other. We can become homies together and we can grow together. All right. And if you're someone that wants consistent support, because remember, you're not doing this alone. You're not doing this alone. And when you do it in a community, it oftentimes shortens the journey. So we are here on our road to approval, and we have a um program and a community that we offer to help you accelerate the process of home ownership. I know many people who wait years to purchase a home because they're just doing it in a bubble by themselves. They don't have anyone holding them accountable, and they often fall behind due to shame and other setbacks that come in life. And what I've found is when you go alone, um, you might get there faster, sometimes not, but when you go together, you go further. And this community is designed to support you, whether you're a first time buyer or you're an emerging investor and you're someone that wants to use the real estate you have or the investments that you have and grow your real estate portfolio. You see the value in real estate. Almost every wealthy person in America has attributed a big portion of their wealth to acquiring real estate. And I believe that it is time for us to possess the land. And how do we do that? We got to get approved. We got to be able to use and leverage the resources that we have so that we can grow. So, what is the Road to Approval Academy? Well, you get it's an approval coaching community. So we help you through the process. If you need credit counseling or credit support, credit coaching, if you have questions about lenders and what's the best type of loan for you, if you're just struggling with your confidence, you feel like you can't do it. You might be the first one in your family to do it, or you might not have a family or supportive community to lean on, and that's what we're here for. It comes the logistics of it. You get two one-on-one coaching sessions, an entry and an exit, weekly teaching and accountability, step-by-step buying roadmap, supportive learner community. And it's about those that are serious. You know you need to be held accountable. You know you want to grow and learn. This is like if you were to sign up for a class at your local college to learn about a different topic or get certified for something, we are helping you get approved and helping you work through the physical, the financial, the emotional, the spiritual, and the mental barriers that have been holding you back. Registration is 197. That comes with your entry coaching session and creating your step-by-step road to approval buying roadmap, and your membership is 97 a month, and that just comes with all of the benefits of the community and the support that we offer. So sign up today if you have more questions about it. I would love to schedule a discovery call to talk about it and answer any questions that you have. So before you leave today, choose one action to take before the next session. Sit down and figure out what's your debt to income ratio. Like, look at where you are. What are some things, maybe look at what are some things you can do to decrease your debt. Maybe start to sit and think about what are some things you can do to increase your income. Do you have any banking relationships that you can nurture and maybe reach out and talk to someone about, at a bank or credit union that you deal with about doing an application, right? So let us know, whatever it is, let us know. We want to know. And you can share insight with um, us in the comments. You can leave a comment here. You can find us on social media, and just let us know, what are you going to do? What is that action you're going to take? If you're live here now, put it in the chat. What is the one action you're going to take before our next month's Lunch and Learn so that you can put yourself further along the road to being approved? And let's stay connected. If you're not already on our email list, come on and get on so you can get your notifications. And if you have not subscribed to our YouTube channel, please go ahead and do that so that you can get notifications when we're going live, because I do the Lunch and Learns here so that we can grow heart equity together, personal, relational, financial wealth that we obtain through authentic living. Because homies don't let homies do life alone, right? Right. So, what stood out to you today? What questions do you have? And how can I support your next step? That's my question for you. So, I'm checking here. All right. And here's my contact information. Adelai Brown, Heart Homes Realty. And there's my phone number, email, and there's the link to connect with me on our link tree, where you can get on the email list so that you can get the notification so that you can just easily merge into our monthly Lunch and Learns. You can go on the website and get connected as well, adelaibrown.com/ Heart Homes Realty. We are so thankful to have you, and thank you. I am so honored to have done lunch with you. Um, Thank you for being here and spending your lunch hour with me. Your journey matters, your home matters, and your heart matters most. So I thank you. I thank you for taking this time. I hope that it was helpful for you. Remember, next month we are learning about shopping for your home, right? And make sure you follow me on Instagram and Facebook, and all the places at Heart Coach Talk. And I'll make sure I have that on the screen the next time so that you can find out more information about what we got going on. Um, so I will stop. Let's see. All right. So thank y'all for being here, and we will be back next month.